The Philippines is cleared from the U.S.'s proposed 40% tariff on transshipped goods, but the future of semiconductor exports remains uncertain. Despite this, economists remain optimistic about the country's resilience and economic recovery. Jin Kim has the details.
The Philippines is not affected by the United States' proposed 40% tariff on transshipped goods. This was the clarification from Presidential Special Economic Advisor Frederick Go, joined by the country's economic managers.
We are not covered by that because we are not identified as a country who does transshipments. So we do not have that clause. So for example, other countries might have a 20% tariff for regular goods and 40% tariff on transshipments. So we don't have that clause.
However, the issue remains unclear on the potential 100% tariff on semiconductor exports, with Washington's announcement shifting several times. Semiconductors have been exempted, re-included, and then reportedly set for possible exemption again.
So we are still seeking clarification from the US TR side. And of course, we are lobbying that our semiconductor exports likewise be exempted if there is such.
This includes semiconductor assembly, testing, and packaging operations. He admitted this is weighing on investor sentiment.
In this period of uncertainty, it's very difficult for businesses to make long-term investment decisions.
Despite this, economists like Security Bank Chief Economist Angelo Taninco remains optimistic.
The fact of the matter remains, Philippine economy is domestic-oriented. We think that the domestic resilience of the Philippine economy will help the recovery fast-track, and that's why for next year we are upbeat.
I think that those are temporary things. The lag effects of this past lowering of policy rates and the inflation will continue to be felt in the coming quarters. The exports, we expect to at least in the next, not just this year, but in the coming years, the trust that we have is to diversify the economy so that we don't only have consumption as domestic household consumption.
Bangko Sentral Governor Eli Remolona Jr., who has cut policy rates 5 times to support growth, said,
I think things look good. I think there's room for at least one more cut. You have to balance the risk of inflation against the need for growth. Our policy rates, along with the very resilient banking system, I think are supporting growth.
Further reinforcing that
we're not going to see a crisis in the near future in the banking system. That has always been a big issue in the past. Our reserves are more than adequate. I think we're at 6 times short-term debt, so we're okay on that score. More than adequate, I would say, in terms of reserves, in terms of protecting ourselves against a foreign exchange crisis.
in the same forum. Finance Secretary Ralph Recto confirmed that a study is underway for a general tax amnesty bill to aid fiscal consolidation. Jin Kim, Billionaire News Channel.